Welcome to Trading Lounge and the US Indices for the 15th of March, and starting with the S&P here, we will look at the Nasdaq and we'll probably have a look at Amazon as well. So from the Christmas run up through here, we've got a few counts up here, and we can take a look at some different counts, but I kind of like this one the best because, as I mentioned before, this wave 4 here pulled back 38.2%, which lines up with the wave 2 low in through here as the 38.2%. The question next though is the move up through here, making a new high here. Do we put that wave 5 here? Or do we look for a larger 5-wave pattern through up here? So this is what we need to work through. Next week, really need to work through that. So yeah, let's just drill in and stay with this count for a second or two, and then we can have a look at some other counts as well. So moving in here to the 4-hour chart here. So this is what we're looking at the moment. So we're counting an impulse wave to the upside here. I think it's like this, rather than having this wave 5 coming in as a top here, in terms of 5 waves here. I think it's probably better to have this sitting up here. And one of the reasons for that too, if I can just have a look at, just bear with me a second here. Okay, I was just having a look at the IWM, the EFT on this, and we can see that, I was just checking then, this pullback here as an A and a B and a C here. This move up through here doesn't really give us a 5th wave top, does it? So it's highly likely that from this point, this is just the trading levels charting program, so it will probably look something a little bit like this here. So I just wanted to check that, so that's cool. And I think the Dow Jones has got the same sort of pattern. It's still quite low down here compared to its high here, so there's upside there to go for these guys. So it's just that the S&P is trading closer to the top here, so more of a leading indicator. So our question now though is, today this little move up through here, so we need a trading strategy for all of this now. So this little move up through here, is it finished on this high here, or do we have one more little high here for the Friday, and then look for an A and a B, oops, a little bit high, and a C wave pulling back 50 or 60%, and then moving up into a 3rd wave to higher ground there. So let's just go into the hourly chart, and we'll just need a bit of a strategy for this. So just saving that at the moment and moving into this here. So let's just drill in through here a little bit. So this is what I'm thinking. I'm thinking that you know, we've had our A wave, B wave and C wave down through to here, and now we're looking for those 5 waves up. So 1 and 2 here, and 3 and 4 here, and I'm thinking 1 and 2 and 3 and 4 and 5 up to this point here. So up to, we'll talk about the trading levels in a moment. So yeah, it's also possible that a top is in play here, so we need to be mindful of that. So one of the things here that we can talk about, I'm just going to go into the tick chart now and look at this, if that's okay. Just drilling in here to look for things. So yeah, so from the low here, this is 100 ticks, so 1 and 2 here and 3 here and 4 here, and then 1 and 2 and 3 and 4 here, and this 4th wave here, this 4th wave coming in here, so from the low of wave 2 roughly in there to here, that's the 38.2%. So it has spiked down to the 50% here. So in a nutshell, we wouldn't want to see this moving any lower. So what we could say here is, we could say that if the market moved down below, the 2800 area here, if it moved down here, then we have a top in place. So then we need to grab this here and put that over here and this over here, and look for a top there. But I'll just put that as, I'll just dull that out here for a moment, so that can be our alternative count. And the reason that would becoming a top here would be because then this here would be wave 3 here and wave 4 here, which makes the best sense because I've gone back over all of this here. I mean, I've kind of got to start down here, but I've gone all through here to really sort of drill in here, and I know that I've got this right here. So from wave 4 here is wave 1 and 2 here, and then 1 and 2 here, and then 1 and 2 and 3 and 4 and 5 here for the third wave, and then the fourth and the fifth. So because I was thinking that this could be wave 1 and ABC for wave 2 here, just the way that it's shaped here. And it's possible, but I'm still one wave short then in through here, and I've pulled all this apart in through here, so I'm okay with that. The other count, of course, no, that's okay, just double checking. So I think that I'm on the right track. So, but it's always nice to know where you're wrong. So, well, in terms of trading more so than analysis. So if the 28 becomes a retested resistance, becomes the resistance, well then we know that we've got this top in, and then we'll be looking for a move back lower in here. So we'd be looking back down into group 2. So in terms of the trading levels, the 2800 here, or the 8 here, is a minor trading level 8. And then from minor level we go to the sub level. So sub level, this is group 2 here, 65, 72 and 80, and above that is 10, 20 and 30 here as group 1. If we find support on top of group 1, not trading above it is not support, but it needs to come back down and sit on it. If that's support, then we can start looking up to the next level here. So the sub levels here really are just the Fibonacci as a price ratio. So we would look at 1, 2 and 3 here is 10, 20 and 30, and then the next level in the sequence is number 5, so the 50 here, and then 8 here. But the trading levels is a little bit deeper than Fibonacci as a price ratio, so 72 and 65 will come in as group 2 there. And of course you can go smaller into micro levels as well, and in terms of micro levels, this is where the long trade would come in. So we've got 10 here, or 1, and 1 is the strongest number in the market, followed by 5. So with the 1 here, we can see that it's resistance at the moment. So if it becomes support, then that would highlight a positive trend starting at that point. And just to be sure, if we go from 10 to 13 here, so 28.13, if 28.13, this is the safe trade, if 28.13 becomes the support, then that's the long trade from that point. If this market drops down through here and taking this low out here, which it looks like it would like to do, well, then it's going to come to the 2800 and bounce at that particular point there. If it bounces through to here, then it's going to bounce, go up, and then come through and then retest this here again here as well. So this little move here, if we just go into the 20-tick chart here for a moment, the reason this will drop lower here for us because this little move here is in 3 waves here. So this is corrective at this point. So the trouble is counting this, having this as in a top here is fine, but it's very difficult to count 5 waves down through to here because it seems to be overlap. It actually seems corrective even though it's going to move lower. I can see that there's 5 waves in here. This move coming down through here, there's only 3 in this move here. There's only 3 in this move here, and there's 3 in here. So it's like we've got some sort of triple zigzag pattern happening across here. So anyway, let's just go back to the hourly chart where I can draw on the chart, and I'll just put this back onto 100 ticks because that's on 20 ticks. So yes, we'll go back to the 1 hour chart here. So what we can do here is that from here, let's copy that, we can go long on that little high here, or support on the 28.10 at this stage, and the safe trade is at 28.13 to the long side. So this wave 4 here is getting a little bit more complicated, so we don't want it going below. We don't want it going below the 2800, because then that's below the 50% retracement level. It also overlaps wave 1 here as well, so that would make this here, if it moved below that, then this makes this the high here of this. And then if that's the case, then we can look at this move here to here, and we would be coming back into the 50-60% retracement level area here, which would be part of group 2 area through here. So that's how we can look at all of that. Now, of course, you would want to be short. So on this, it doesn't have to come down as an A and a B and a C here. This can all be part of the correction unfolding down through here. So if you're going to short this, you could short that now and keep a stop above here. But I don't particularly like shorting when you need to be on the right side at the right time. So what that means is that the right time of what? Well, the closest largest numbers. So out of all these numbers here, these prices, the 28 is where the most orders are going to be sit. This is where the larger orders are going to be sitting. So we'd want to see this move down through here. It would bounce back off this point here, and it might go further back up at that point too, being wave 4. So you don't want to get trapped there. So the next move, if it moves through here and it come back and retest here, on this retest it could also go back up there as well. So what we do is we look at this low here, and then if that low is breached, then we know that the bears are in control at that stage and we'll be moving down, and you'll get a bounce off number 8 here as well. So the 2772 in here, the part of group 2 here, that's going to be a very solid support area through there. So be mindful of that. So in a nutshell, looking at this in terms of trading, we've got wave 1 up here, and then we can pull all the way back into here. If this is the case, pulling into here, we would also need to see some evidence pushing to the upside, because this here could also be part of another top in here, as I've mentioned a little bit earlier. So with this top here being in play here, that can be in play there. So we need to be really mindful of that. But any move back below here and then a move back up and finding support on the 28 would create the long trade for the next trend to the upside, which would take us up to the 3,000 mark at that point, way up there, because we'll be looking for 5 waves there. So when you're thinking about that up here and where we are here, we'll have plenty of time to do that. What we need to see here is we need to see a corrective move down. So to cancel out that this is being a top here, we need to see a corrective pattern here. So under the 61.8% mark down here, under group 2 here, if this becomes group 2, subgroup 2 becomes the resistance here, then we need to be on the short side of the market. So they're the trading strategies in a nutshell. We can go to the bigger picture now and have a look at different ways of looking at this. So if we went to the daily chart, for example, we could look at the market like this here. So we know that the move down here is corrective, and it doesn't mean that that's the end of the correction, really, because we know that the market's come back up and hit the brick wall here at the 28, the minor trading level 8 here, and it's above the 61.8% mark. Not that that's here nor there, but this whole correction could get bigger as well. We could end up with an A wave here, all this up here is a B wave here, and then a C wave down through to here as well. So that's on the cards as well. So we need to be mindful of that. But as it stands at the moment, we can count this up here. We could count it up in this way as well. So wave 1 and 2 and 3 and 4 and 5 here for wave 1, and wave 2's here. So 1 and 2 and 3 and 4 and 5 here for this market here. So let's go back to our original count here at on this chart here. This is the one that I like the most in this instance here. So wave 4 here with 1 and 2 and 3 and 4 and 5 moving up higher here. But yeah, it's always nice to be mindful of other counts with all of this. So just dropping 1 degree lower here. So this count as an ABC pattern to the upside would be wave 1 here, wave 2 here, wave 3 here, wave 4 and wave 5 for the A wave here, an A and a B and a C for wave B here, and then 5 waves up here for 1 and 2, and we know this is all the third wave up here, the fourth wave and the fifth wave. So the thing is here, you know, we can have this as an ABC pattern here because that's the way that the count sits at the, that's how it can be counted at the moment. So we really need to be mindful of that. So any short trades that we look to put into the markets here, this, let me just grab this here, the 2800 here. So the 272 area here and the 65 here, it's at these points here when the market breaks down. That's when it would have broken down and moved lower from. We expect it to come back into this space, 61.8%, but finding this as a resistance here creates the bear market at that stage. So we need to be mindful that we stay above certain levels within all of this here. This is a minor trading level 8. I'm just going to put it into a larger picture there. So that's that. I'll just save that while I'm there, and just moving down into another degree here just to look at other counts. This is another way to look at it here in terms of wave 1 and 2 and 3 and 4 and 5 here for wave 1 and back for wave 2, then 1 and 2 and 3 and 4 and 5 here for the third wave, the fourth wave here, and the fifth wave up here. One of the reasons I don't like this count for is because if we look at the distance of wave 1 here on this sort of yardstick that I've got here, this yardstick here, then when I put that from the low of wave 2 here over here, and looking at wave 3 here, wave 3 to the upside is much shorter. So that means that if that's going to be the case, wave 3 can't be the shortest one there. So if this yardstick here is wave 3 here, and I'm taking it, putting it on the low to wave 4 here, that means that we need to get 5 waves up here, right, that are going to be shorter than this stick here, so just below the 2900 area here. So that means that either wave 5 is in play top here, is already in play here, and that's the top, which makes it really short. It doesn't really have the right look and feel about it in terms of an Elliott Wave count, but it's there, so you know, we can throw sticks and tomatoes at it later. Yeah, so yeah, anyway, that's it really. Let's just have a quick look at the Nasdaq here for a moment. So with the Nasdaq here, it's the same thing with the SP 500 here. We can have this top already in play here. So in this case here, any long trades that come into play here would need to be just need to take out one of these highs here really. So do I have a green stick? Yes, I do. Let me just have a look at this for the short side here. First things first, if that is the third wave moving up here, then that's the 50% retracement level here and the 30. So it's already moved through the 38, the 40%, and it's touching on the 50%. So, you know, it's showing signs of weakness there. So if you're keen, there's no real big numbers here. The 72 is here. Yeah, right. So anyway, that's the long trade to the upside above those highs. And short trade here is high risk. I'll leave that to you, but of course you could just short under the previous low here, but I'm just going to put that in a very thin line here just to represent half a trade, smaller trade position there, because obviously as a intraday trader you want to be in line with the trend, but being aware of the larger trend, not only this one but the one behind that as well. So a little bit dangerous there. Let's just have a quick look at Amazon here for a moment. Okay, so with Amazon, from the low here, we've got a 5-wave sequence to the upside. We knew that this move down through here was in 3 waves. So we've always known that this is correct, the whole pattern is corrective. We thought that it could be an ABC to here, then up here to find support here. And we did go long just in here and got back out just above here. So a few pennies there, but to basically break even. So in this situation here, what we're looking for is this is 5 waves here, so we're looking for, and it can make one more high with the same as the S&P, but our trade that we're looking for is that we want this 5-wave sequence to finish and then fold back and retest this this level here, the 1650, which in terms of the trading levels is a medium level. It carries a lot of weight, but you don't need to understand that you can just see it through here. It's the balance point within this pattern here. Okay, so yeah, before we can trade this long, we don't particularly want to chase it high here. If the 72 here, the 1720 becomes the support, well then we can trade it long at that point, because otherwise then it's just going to creep higher. But the beginning, the middle and the ending creeping part of the structure here is just about completed, and we'll be looking for an ABC back here. So when that occurs and we can confirm that it is corrective, then we've got ourselves a nice long trade into a 3rd wave at that point. So I'll leave it at that. Thanks for tuning in. As always, much appreciated, and enjoy the weekend. Cheers.